Hey, this is Jim. It's 3:40 p.m. in California on February the 23rd. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So I'm going to start with this. A picture is worth 1,000 words is an adage in multiple languages, meaning that complex and sometimes multiple ideas can be conveyed by a single still image which conveys its meaning or essence more effectively than a mere verbal description. Which brings us to this chart. Now, if you guys can stick with this entire video, I'm going to show you I'm going to show you not only where Aron cut the deal with Goldman in relation to the Nimoy terminal setup, but I'm going to show you the current setup and hope some reasons for optimism here. But for some of you guys and women that can't stand the fact that I'm, sort of bashing Aron, I can't help myself. I mean, what I've seen happen already and what I continue to see happen makes me so mad, not necessarily for myself, but for the people that I know, who I've met behind the scenes, who, even if a bit of it was their own fault as far as getting over their skis size-wise, there's still no excuse for this sort of profile of person, good people, hardworking people, to have taken it on the chin the way they did with this stock. And I'm convinced through going back and looking at this thing in multiple different ways, from multiple different views, that I've come to the correct conclusion that Aron needs to go. I agree 100% with Pedro that if Aron were to leave the company, the stock would move straight up. I mean, it would be a stampede of short covering and buying on the long side. So what I want to show you here is, if someone were to pick up the phone and call me and say, hey, Jim, can you help us create the worst looking chart that technicians could possibly be looking at different time frames? In other words, tell us when we should release bad news. I couldn't do a better job than what I'm about to show you guys. It's really mind-boggling now that I've kind of gone back and drilled down on the weekly. So here's your 2013 IPO. Aron is announced CEO and president in 2016. Basically, you create a little double top there off of the IPO high. And then here's where he starts stacking debt. These two boxes, this represents from the time he took over the company until the stock price pre-lockdown, right? So everything's blamed on this, COVID lockdown, pandemic, and collapse leg. But prior to that, this is the reality. He was in charge right here. He stacked that on the company. This is where the stock was trading deep into an all-time low. Again, this is the IPO price. So you're already trading at an all-time low. August 2017, he became the CEO and president right here. So, that's not great right out of the gate. You have a little bounce, and then again, you're deep into all-time low territory pre-lockdown. Then you get slammed down in the lockdown. You get this first move up, and then here's where you make your previous all-time low, January 8th, 2021, prior to the sort of melt-up leg that we all became involved in. Here's the first sort of bullish thing that happened chart-wise to the stock, and then I'm going to show you conversely how every single opportunity that the stock has to form something that looks encouraging or bullish on the weekly has failed, and every single opportunity for it to form something that looks bearish has worked perfectly, and it's been coincident with news releases from Aron and the company. So you can see right here, if you know anything about technicals, that this is not a perfect channel, but it's pretty close and pretty nice looking. And when you fall out to this extent and then you recapture, that's pretty bullish. Now, this is a little unusual for the price to fall out a second time after you sort of see that recapture and re-entry into a channel. Typically, when you re-enter a channel, especially on high velocity like this bar right here, that means that you can count on price returning to the upper end of the channel, even if it's going to dump back down and trade to lower lows down the road. So this, this is odd. This September of 20 down into that low right there. But then you get this really sharp recapture. This is, piggybacking on the GME January of 2021 melt up leg. Of course, GME had a much larger leg on a percentage basis than AMC at that point, but then AMC outperformed GME on this, the one that we all caught, or at least once I got involved. So the first thing that's really encouraging here is on the second reentry, where I said again that you would expect to see a really fast market price move from the recapture of this channel back up to the top of the channel. You not only saw that, but then when it pulled back down, you see a nice bullish resolution here on during this period. Now the reason that's your first really important downtrend line that you want to see price hold above within this new structure off an all-time low, at the time it was an all-time low, is that you have point of origin high right here, call it April of 2019, and then you form a low, you form a bounce high off of that low, right? The highest high, it's above this level here, so into September rather, and then you post a lower low here. This is a slightly lower low here into January than this low that was posted in April of 2020. So again, that means that's a valid downtrend line. Price moves above it, pulls back. This starts to become support, bullish resolution to the upside, especially on that nice weekly bar right there, the green bar and acceleration. Then it does something even more bullish. It pulls back and it recaptures really the main big picture long-term downtrend line drawn off of the 2017 high and the 2018 bounce high. So right here, that's really constructive. This is when my model started to become very, very bullish and predict the melt up leg that then we got, the 700% move. Again, it was the best performer of the major memes at that point in time. So you'll see here where I have a note here, left shoulder off of this spike, head into the all-time high, and then I'm going to show you right shoulder that had to do with the ape. This is where the way the stock trades completely changes in character, to where, again, if you were to pick up the phone and ask me, hey, can you help tell me exactly time-wise and price-wise where to release news that will be interpreted bearishly, to trash a chart and to make it look like the most perfect short candidate for short sellers, I couldn't do a better job. So I'll move forward here, and then we'll concentrate on just this part of the chart, if I can get this damn thing to move for me. My chart's frozen, gang. How am I going to do this? Here we go. All right, we're going to have to readjust. Bear with me. I'm not going to do a second edit of this thing. They're not going to let me get a good view of this damn thing. I've only used this platform for decades, and this is the first time this has ever happened. Oh, it doesn't want me to resize that. Let's do it just like this. Okay, so again, you had that little support here on the break of this major downtrend line, then our melt up into the top, okay? So now I want you to focus on this. Left shoulder, all-time high ahead, right shoulder. Now, the reason I wouldn't draw my trend line, my neckline, which is what this is, off of this point and this point right here, is that I like to see a shoulder, the shoulder formation take about the same amount of time and be fairly similar. So you're not in the way it's slanted. It doesn't have to be symmetrical in meaning that, you know, both the shoulders are at the same height. But what I like to see is time-wise, right? So this left shoulder formation requiring about that much time before it takes off into the head formation. If we use this one right here, it's just too short of a period of time. And so that's why really it's better to use this period here. There we go. This period here, because it's a much better match. So again, if we draw a neckline here, and then we're saying that this structure here is a left shoulder, that this entire thing up here is the head, and that this is the right shoulder, then it's very important that you don't break that neckline, or if you do break the neckline, that it turns out to be false. So you guys know if you trade some of these patterns, that some of the greatest profitable moves you can get to the upside are off of false breaks of a potential head and shoulders top, false break of the neckline, and then recapturing and taking off the upside. But when you have what happened here, it's obviously bearish. So again, if we use sort of my rules of symmetrical time frame to build shoulders, you can see that if I wanted to first dump all of my insider shares into the head, right, into the left shoulder and head, and then I wanted to form a right shoulder on this chart. And by the way, this is where Aron becomes the chairman. Again, he was already CEO and president 2016. This is where he stacked the debt, obviously, and then this is where he's given the trifecta hat trick of CEO, president, chairman. So again, if I wanted to form a right shoulder with a devastating neckline break, this is what I would do. And again, you guys remember this ape and what subsequently happened to retail shareholders, didn't have to happen. I'll go back a million times and make the argument that if you were the CEO, president, and chairman of a company that had been embraced by retail to the extent that AMC had been embraced by retail, the last thing you'd want to do is alienate that group. And the best thing that you could do, the most stand-up thing you could do, is that if you ever did need to raise capital, that you gave your existing investor base the first right of refusal, right? I would go to you and say, hey, would you like to invest even more money in my company? And if you said, hey, you still believe in the company and you're not going to sell your shares, but you're not in a spot financially to add to the position, I'd understand that. But out of respect, I would always give my first investors, and I've done this before, first right of refusal before I brought a new person in to add to the capital. So along the way, you notice that never happened, including in the CRS, where instead of doing a rights offering, with Ape rather, instead of doing some kind of a rights offering, he decided to give to make sure in the verbiage of the SEC filings that they were only going to offer those Ape shares to institutional investors, and then he turned around and offered it to a single institutional investor, which we know why he did that, because he needed someone to guarantee that they would vote in favor of the company. So at this point, you have that sharp break in the neckline. You have this stabilization here, potentially, again, on this long-term downtrend line. So just like this bullish formation here led to this move up, you have a shot here, even though this is sloppy. You guys know I call this a bear crawl. This is pretty raggedy and sloppy, but you could make an argument that it was trying to form sort of a ragged inverse head and shoulders pattern here, with this being the left shoulder head, right shoulder, and you could have formed that on this, this line, this downtrend line, which was formerly resistance, now hopefully becoming support like it did right here, and you could have started to take off to the upside. Well, as price starts to try to take off to the upside, this is when he decides to do the 1 for 10 CRS, and again, putting retail in a position where, although they had owned basically the float of the company, now they have a tenth of that. Like, if retail would have owned the entire float, they would own a tenth, right? Because it was a 1 for 10 reverse split. So again, chart-wise and opportunity-wise, as far as the chairman and CEO deciding, does he want retail as his partner, or does he want institutional investors as his partner? We know which route he took. And again, remember, anytime that you have a situation where with APE where the shares move into institutional hands, that's an opportunity for those shares to move into the hands of shorts to cover. And then the same thing with the CRS, it just provides all sorts of opportunities for shorts to cover. So it's no matter how you slice it, he's not doing any favors for retail. If I move forward here, the next thing that happened, and again, remember what I mentioned about moving into a trend channel, how you tend to get fast market moves back to the top of the channel. The same rules apply to the bottom of the channel. So you see that big crash. That was on the CRS that Adam did, obviously. Then it starts to stabilize right back down here where, these two downtrend lines that are theoretical long-term support, where it built this sort of double bottom into the first 2021 move up. You start to stabilize right here again, okay? And not great news, because obviously this CRS was so devastating that it decimated the stock well below any previous all-time low. But it starts to stabilize again and move up. In other words, looking fairly encouraging on a chart basis. So again, if I were advising Aron on how to trash the chart and not let it start to look constructive again, this is what I'd be telling him. So they dilute another 350 million shares. The stock plunges. You can see this speed line here that I've created off of this August of 2021 low and this January of 2022 low. You can see the stock crashes down into that speed line and then bear crawls down the speed line, which is super unusual. I mean, I really don't know how many other examples I could even find on a long-term chart. Typically what happens when you have a fast market attack of a speed line, it's one and done and you just turn and rock it. That's what you can see if you go back and study the S&P in the 1987 crash. You'll see once that speed line contact was made, that was it. If you could buy that, you were a hero. So then what happens is the stock bear crawls down that speed line, finally turns around here on the Roaring Kitty pump of GME. AMC is able to sort of piggyback along for the ride. You start to recapture sort of this, old long-term support here on these two yellow lines again. Right here, you start to curl and move up, and here comes the Goldman deal. And then that takes us down into the low. And you guys know I was off of YouTube for a long time because there was really nothing to post about. And then finally I came in and posted the video on January 29th telling you guys that my model had identified, the BAM model had identified some zones of strength coming in February here that looked pretty impressive. And then Anemoy was also sort of setting up, looking more friendly. Nothing great, but a 28% move off of that low. So again, this is not great. We need to see this stock move back up at least into this channel. And ideally, we obviously want the stock back above this downtrend line right here, and then a break of that December high when Adam stepped in and crushed the stock. Now, I'll show you guys really quickly. Also on the Anemoy terminal, I'm going to go with a full screen view for you guys. This looks a little noisy right now, but I'm going to pull a few of these velocity bars off the chart one by one and show you guys how devastating it was where Aron stepped in into that December run and struck the deal with Goldman. And again, if I were coaching him on timing and price levels to destroy the stock, I couldn't coach him any better. So first off, I'm going to get rid of this, the weekly velocity and the daily velocity. So you can see as price, which is the white line, moves up toward that gold line, which is the weekly trigger, and this stock hadn't been anywhere near the weekly trigger in months. You can see over here. Here's the weekly trigger way up here. And then with price moving down, finally it starts to attack. I'll get rid of the white line, which is the price line. And you can see hourly velocity was absolutely screaming and peaked right into the price advance. So that means this is a super healthy advance. You don't want to see velocity divergences, bearish divergences as price moves up into that weekly trigger. You want to see velocity leading price. So beautiful advance, everything technically perfect based on the anemoy terminal. I'll get rid of that hourly velocity rendering. Let's look at what daily velocity was looking like at the time. I mean, look at that. Absolutely perfect. You continue to have higher velocity readings as price moves higher. Zero bearish divergence. This is confirmation in hourly velocity and daily velocity. Then we go to the weekly velocity. So here's why this was so critical. So weekly velocity was still negative, but as we moved into that week, remember anemoy is predictive, and so it's always giving you the look forward time frame velocity. So in other words, as we closed on this Friday, the anemoy terminal was telling us that for this entire next week of trading, which was December the 2nd through the 6th, that velocity was very barely negative. 0.001771. So basically nothing. This puts the stock in a position to see not only an attack of the weekly trigger, which it had, into the late into the previous week, but a move above the trigger, and most importantly, a close above the weekly trigger. Because a close above the weekly trigger then would generate positive velocity on the look forward for this next week. So keep in mind, if you followed me, you know how important it is for Wall Street and their algorithms to track every single price bar time frame and to game the close of price into the closing time period of that bar, whether it's a 25 tick bar, a 1 minute bar, 5 minute bar, 60-minute bar, a daily bar, weekly bar, monthly bar. They're always looking at what the effect of a bar close at each and every time frame will have on the technical indicators that most people use. And that's the way they game the technical indicators, so that then they can sort of weaponize whatever funds they have, and they can bring along a group of traders with all of their collective capital to push a stock price in the direction they want it pushed, whether that's up or down. Okay, so keeping that in mind, think about how important it was to have a close above this gold line right here, which is the weekly trigger. I'm going to get rid of the velocity, so we're just going to focus on that weekly trigger now. Now, you can see at the bottom of the chart right now the date render. So you can see here's where we're just now moving into Monday, December 2nd. So we're above the weekly trigger. Weekly trigger's at 497, price is trading up at 504. Then on the 3rd, we get a little dip, but the velocity is so positive on the lower time frames, meaning the daily and the hourly and the 5 minute, the 1 minute, that this is going to turn around and rip back above the weekly trigger. So then you move into December the 4th, and finally here we are, Thursday, December 5th. The stock starts to take off. The stock breaks above the previous high from Monday, and again, daily velocity and hourly velocity are screaming, and all the stock needs to do is hold above that weekly trigger, $4.97, into the Friday close, right? So here you are, late in the session, 11:30 my time, 2:30 New York, and all you need to do is trade over the next several hours and hold above 497 to flip weekly velocity. And what happens? Aron steps in and decimates the stock on that Friday. And here you go on December the 6th, and they take the stock all the way down to the 474 level against that 496 weekly trigger. So this is pure price manipulation. This was 100% planned. You can only have 50 coincidences in a row in a stock like AMC before all of you need to wake up, smell the coffee, quit blaming me for sharing proof of what I'm sharing, and then all of us to band together and to demand that the company replace this guy who has been in the driver's seat during all of the decimation that I just got through showing you in this chart, and all of the perfectly timed stuff that went on, and again, all of the excuses, even though a picture tells 1,000 words. This is where he took over. This was stacking debt. This is where the stock was before the COVID lockdown. And then this is where he was able to ring the register on all of his shares for himself and his kids. And again, this bullshit line about him being aligned with us because he's the largest shareholder. The reason he's the largest shareholder is because after he decimates the stock with reverse splits and dilution, he always makes sure to go and award more free, and that's what it is, free stock to himself and his buddies. And then to boot, he always sells enough of the stock, and again, that goes straight into the hands of short sellers. He sells enough of the stock to cover his tax liability. So not only does he own completely free stock that he didn't earn, but that he didn't pay for, but he also has zero tax implications because that's taken care of through diluting the stock by puking out a portion of the shares that he's awarded himself. Hope that was helpful. Again, I'm a supporter of the company. I'm the only person out there who covers the stock in these videos, who is an actual SEC whistleblower on the side of retail. It's cost me 100% of any chance at doing any institutional business. I've lost a good friend over this. But more importantly, really for me, is that these guys have gone after all of my businesses and something that I'm not going to share with the public, but there's something that they're doing behind the scene to me right now, which is the dirtiest, most blatant example of weaponization of government that you could talk about, other than what they've done to Trump and some of the other people that are not towing the line party-wise against the globalist cabal. Anyway, I hope that was useful. I'm not going anywhere, and I'm going to continue to try to expose this fraud. By the way, I've mentioned it before. I absolutely have been passing along a video proof of price manipulation and details of exactly how it's being done to all the right people. You guys know Doge is starting to lift the hood on some of this stuff next. And so believe me, the people that are working in the administration and close to the DJT stock, who obviously people that are closest to the president, have had information handed to them directly by me. And I won't name names of the people that were on the calls and things like that, but I'm hopeful because these guys know exactly what's going on in detail. And I believe at this point it's just a matter of them trying to figure out how to have the bad actors gracefully be run over, right? If you get run over by a bus, it's tough to make things look to make things not look too gruesome once the bus hits the carcass. So I think they're trying to figure out a way to let the bus hit these guys without it creating so much collateral damage once contact's made. That's it from my side. Good luck.